Hi everyone, in this video we will be going over A-Level Accounting 2022 May-June Paper 3-2 question number 2. This is the structured paper 3 which consists of 6 questions, each of 25 marks, and we're also given a time limit of 3 hours, which means that ideally we should be spending about 30 minutes in order to complete each question. And in this video as well, we will be attempting to solve this question number 2 under 30 minutes. So without any further delay, let's get started. AB PLC is a trading company. The draft profit from operations for the year ended 31st December 2021 was 98,000 before the following items were considered. The first item, at the date of 1st September 2021, AB PLC issued a 6% debenture for 200,000 and interest is payable half yearly. Okay, we can see that we have the ending date of 31st December 2021, which means that for the months for which we need to pay this interest on debenture is going to be September, October, November, and December. So let's figure out the interest charge for these 4 months. We start with the total amount of debenture, which is given to be 200,000. Then we multiply it with the rate of debenture, which is given to be 6%, which we can write down as 0.06. But remember that this will provide the interest charge for the entire year. But we only require the interest for the 4 months. So we just multiply it by 4 and then divide it by the total number of months in a year, which is 12. Now this gives the total interest for the 4 months which should be charged in this year's income statement to be 4,000. And since we're talking about interest charges, this is definitely an expense which should be subtracted from our draft profits from operations, right? So this amount should be subtracted. Now, revaluation reserve at 1st January 2021, 72,000, arose from the revaluation of a property on 1st January 2017. The property was purchased on 1st January 2013 and it is depreciated using the straight line method over its useful life of 40 years with no residual value. Alright, then on 1st January 2017, the market value of the property was 432,000, which is after the revaluation. So I'm just going to prepare a timeline right here. So this is the year 2013, 14, 15, 16, 17, 18, 19, 20, and then 21. And we know that we purchased this property on 1st January 2013. And the first evaluation took place on 1st January 2017, which is right here. And we're told that the basis of depreciation is straight line method, where we utilize our useful life of 40 years. So this is the useful life of 40 years starting from this date. But whenever there is revaluation, we no longer need to consider the time amount that has already been elapsed, which means that after this revaluation on 1st January 2017, now our useful life will no longer be 40. We just need to subtract the time that has already been elapsed, which in this case is 2013, 14, 15, and 16. So 4 years have already gone by, which means that now the useful life will be 40 minus 4, which results in 36 years. So this will be the basis in order to calculate depreciation using this amount of 432,000. Then we're also told that 1st January 2021, the property was revalued again, which is right here. Again, we need to no longer consider these years which have already been elapsed. So that's the previous 4 years, and then 17, 18, 19, 20. That's another 4 years. Now the number of useful life is just going to be 40 minus 4 minus 4, which now results in 32 years. So the basis or the number of useful life which we will be utilizing in order to calculate depreciation using this amount of 296,000 is going to be 32 years. And no accounting entries had been made to record this. So this just means that we had not recorded this revaluation made on the date of 1st January 2021. And whenever in cases of revaluation, we need to calculate whether there was a revaluation upwards or a revaluation downwards. So at the date of 1st January 2021, the new revalued amount is 296,000 and we need to compare it with the previous value. And here we can see that on the date of 1st January 2017, the market value is given to be 432,000. So right here, the value is 432,000. So in order to figure out its corresponding value at the date of 1st January 2021, we just need to subtract the depreciation charges for these 4 years, right? So let's figure out the depreciation charge based on our market value of 432,000. We're using the straight line method, which means that the formula is going to be our value minus residual amount divided by the estimated useful life. In this case, the value is 432,000. We're not given any information regarding residual value, so that will be 0. And we have already figured out that the number of useful years to be utilized is 36 years. This gives the depreciation charge per year to be 12,000. Now, in order to figure out its corresponding value at this date of 1st January 2021, we now need to subtract this depreciation charge 4 times for 4 different years. Okay, so the value at 1st Jan 2021 is just going to be 432,000 minus 12,000 times 4, which results in the amount of 384,000. And now we revalued it to 296,000, which is lower than its existing value. So this is definitely a revaluation downwards. Let's figure out its amount. So revaluation downwards is just the difference between these two amounts. So that's the existing amount of 384,000 minus the revalued amount of 296,000. This results in the amount of 88,000. And remember that this is the revaluation loss, which should be adjusted in our revaluation reserves in equity. Then the bookkeeper had continued to provide depreciation for the property based on the value of 432,000. But we have already revalued it to 296,000. So let's figure out the correct depreciation amount. And this is based on the amount of 296,000. So the formula is again going to remain the same. The value 296,000 minus residual value of 0 divided by the useful life, which is 32 years in this case. This results in the depreciation charge per year to be 9,250. So we should have charged this depreciation, but instead we charged the depreciation of 12,000. Remember that the depreciation charge is always subtracted, and we subtracted this amount of 12,000, which should not have been the case, which means that in order to rectify this error, we can just add the 12,000 back. And then we need to subtract the correct depreciation amount, which is 9,250. So that's minus 9,250. And this results in the amount of 2,750. So this just means that in order to rectify this error of depreciation, we should be adding this amount of 2,750 into our draft profit from operations in order to figure out the correct profit for the year. Alright, now let's move towards the third information. In the financial statements of 2020, a non-current asset was wrongly classified with the effect that the depreciation had been overcharged by 20,000 in 2020 and 14,000 in 2021. And since we're figuring out our profit for the year ended 31st December 2021, let's talk about this amount of 14,000 first. This had been overcharged. And remember, depreciation is expense which should be subtracted while calculating our profit. And if this amount is being overcharged, in order to rectify this error, we should be subtracting it, right? So that's a negative, which again results in a positive. So this just means that we should be adding this amount of 14,000 back into our draft profit from operations in order to figure out the correct profit for the year. And we also know that the depreciation had been overcharged by 20,000 in the year ended 31st December 2020. But now we can't go back and correct this error in our income statement for the year ended 31st December 2020. But we do know that whatever profit that we got in that particular year would be added in our retained earnings, which means that in order to adjust this, we can just adjust this amount of 20,000 back into the retained earnings at the date of 1st January 2021, since this was the error of previous year. We should no longer wait till the end of the year in order to rectify this error. Now let's move towards the fourth one. AB PLC sells goods at a markup of 60%. In December 2021, defective goods with a sales value of 28,000 were returned by customers. So this is the sales value. Let's figure out its cost. We have already given information that there will be a markup of 60%. So this just means that the selling price will be equal to cost times 1 plus markup, which we can write down as 0.60. And we have the sales value to be 28,000. This will be equal to cost times 1.60. Now we can figure out our cost to be 28,000 divided by 1.60, which results in 17,500. Alright, then the cost of the value of the returned goods had been included in inventory at 31st December 2021. It is expected that if 6,000 is incurred to repair the returned goods, they can be sold at 80% of the normal selling price. So let's figure out the new selling price. That is just going to be 80% of the previous price. So that's 28,000 times 80%. Which results in the amount of 22,400. And we also need to incur this expense of 6,000, right? So the new value is 22,400 minus 6,000, which results in 16,400. Now this is actually our net realizable value, right? and we can see that the cost is 17,500. And we know that while valuing inventory, we should always include the lower of cost and net realizable value. So instead of including this value of 17,500, we should actually be including this amount of 16,400. So we should no longer include 17,500 in our closing inventory, but we should be including 16,400. So this results in negative 1,100. And remember that closing inventories are always added while figuring out the profit. So again, this is going to remain negative 1,100. So this just means that we should be subtracting this amount of 1,100 from our draft profits from operations in order to figure out the correct profit for the year. Alright, for the first part of this question, we need to prepare a statement to show the profit for the year ended 31st December 2021. Let's do that. We will start with our given draft profit from operations of 98,000. So we have profit from operations of 98,000. Now, from the first information, we have already figured out that we only need to charge the interest for 4 years, which was of 4,000, and interests are always to be subtracted. So let's subtract this amount of 4,000. That will be debenture interest of 4,000. Okay, then from the second information, we had some revaluation, and we know that we had charged incorrect depreciation. And in order to rectify this error, we just need to add this amount of 2,750. So let's do that. This is of depreciation on property which was overcharged. That's 2,750. Then we were again told that the depreciation had been overcharged by 14,000, and in order to rectify this, we just need to add this amount back. Let's do that. Again, that is depreciation on non-current assets, which was again overcharged. So that was 14,000. Then the last one we have is of inventory, and in order to rectify this, we have already figured out that we should be subtracting this amount of 1,100. Let's write it down. So this is again inventory, and this is of overvaluation. We should be subtracting this amount of 1,100. Now we can easily figure out our profit for the year. That is just going to be the sum of these 5 amounts. So that's 98,000 minus 4,000 plus 2,750 plus 14,000 minus 1,100, which results in the amount of 109,650. This concludes the first part. We can now move towards the second one. We now need to explain the accounting treatment of the following with reference to the relevant international accounting standards. So the first one is item 3. Let's have a look above. We can see that in the third item, we were told that depreciation had been overcharged for the year 2020 as well as 2021. So this is definitely an error. And this relates to our International Accounting Standards 8 of accounting policies, changes in accounting estimates, and errors. Now, for the rectification, let's start with this amount of 20,000 for the year 2020. We have already said that this amount needs to be adjusted to our retained earnings at 1st January 2021, since this is an error of a prior period. And then this 14,000 should be adjusted against this current year's profit from operations as we did in the first part. Let's write it down. So this is of International Accounting Standards 8 of accounting policies, changes in accounting estimates, and errors. Now we first start with the amount of 20,000. So that 20,000 is adjusted against the retained earnings at 1st January 2021, since it is an error of prior period. Then we move towards the 14,000. 14,000 is adjusted against the current year's profit from operations. And this is for the year 2021. Alright, then secondly, we need to repeat the same process for item 4. Let's have a look above. It dealt with inventories, and inventories is automatically our International Accounting Standard 2, right? And here we can see that our cost is 17,500, whereas the net realizable value is 16,400. And we know that inventory is always valued at the lower of cost and net realizable value, which is why our valuation for inventory should now be 16,400 instead of this cost of 17,500. Let's write it down. So this is of International Accounting Standard 2, which deals with inventories. And we know that inventory is valued at the lower of cost and net realizable value. And in this case, we had the cost of 17,500, whereas the net realizable value was of 16,400. Therefore, the valuation is equal to the net realizable value of 16,400. Okay, this concludes the second part of this question. We can now move towards the third one. We are again given additional information. We are given the equity of AB PLC at 31st December 2020. So this is the opening balances. Now, during the year ended 31st December 2021, the following transactions took place. On 1st February, the final dividend of 0.08 per share was paid from the 2020 profit. So let's figure out the total dividend. And the formula is just going to be rate times the number of ordinary shares. And in this case, we have our rate to be 0.08 per share. Now let's figure out the number of ordinary shares. The number of ordinary shares is just equal to the value divided by our nominal rate. And in this case, we have the total value of ordinary shares to be 500,000. And we are given the nominal rate to be 1, which means that the number of ordinary shares is also going to be 500,000. Now this gives the total dividend paid at the date of 1st January 2021 to be 40,000. Now, on 1st March, a bonus issue of 1 ordinary share for every 10 ordinary shares held. So this just means that for every 10 ordinary shares we have, we're providing new 1 bonus shares. Now, let's utilize our unitary method. For 1 ordinary share, we'll be providing 1 by 10 bonus shares. And we know that we have the total of 500,000 ordinary shares. So for 500,000 ordinary shares, we'll be providing 500,000 divided by 10 bonus shares. So that's 50,000 new bonus shares. And we know that bonus issue can only be made at the nominal rate, which means that our ordinary shares will be increased by 50,000, which is the number of bonus shares, times our nominal rate of 1, which results in 50,000. And we're also told that it is the policy of the company to keep its reserves in the most flexible form, which means that firstly, we will be fulfilling this amount of 50,000 utilizing our share premium. And if this is not enough, then we move towards utilizing our retained earnings. Now, on 1st June, 100,000 new ordinary shares were offered to the public at 1.80 each. We know that 1 is the nominal rate, which means that the remaining 0.80 is our premium. Then AB PLC received subscriptions for 80,000 shares, which were fully paid. Alright, let's figure out the amount that it brings in to our ordinary shares. That will be the number of shares which have been subscribed, which in this case is 80,000. So that's 80,000 times the nominal rate of 1, which results in 80,000. Then for share premium, again, that will be the number of shares subscribed. So that's 80,000 times our nominal rate, which we just figured out to be 0.80. And this results in the amount of 64,000. Alright, then on 1st September, an interim dividend of 0.02 per share was paid on all shares held at 31st March 2021. So 31st March 2021 is right here, which means that we only include this dividend for the shares which had been issued before this date. So we have our existing shares of 500,000, and then we made a bonus issue of 50,000 shares. So now the total number of ordinary shares is just going to be 500,000 plus 50,000, which results in 550,000. So we will be providing the interim dividend for these shares. Let's figure out the total interim dividend. That is again going to be the rate, which is given to be 0.02 times our number of ordinary shares. So that's 550,000. And this results in the amount of 11,000. Now on 31st December, a final dividend of 0.09 per share was proposed on all shares held. So since this was the proposed and not the paid one, this will not affect our financial statements. Now, for the third part of this question, we need to state one difference between a rights issue and a bonus issue of shares. So remember that bonus issue of shares can only be at a nominal rate because these will be funded by the company reserves, whereas a rights issue will result in company receiving cash from outside parties, which will be the shareholders. Let's write it down. Bonus issue involves the use of reserves, whereas a rights issue results in the company receiving cash. This concludes the third part. We can now move towards the fourth one. We now need to prepare the statement of changes in equity for the year ended 31st December 2021, and a total column is not required. Alright, so the last column we have is retained earnings. And we also have revaluation reserve. Then we have share premium. And our ordinary share capital. Alright, so firstly we will begin with our opening values. So that is at the date of 1st January 2021. We can see that our ordinary share capital is 500,000, share premium is 86,000. We have revaluation reserve of 72,000 and retained earnings of 192,000. Now the retained earnings one will be a bit tricky one, because remember that we have previously mentioned that this 20,000 should be adjusted against the retained earnings, right? And since this was depreciation overvalued, and depreciation is already a negative amount while calculating our profit for the year, and in order to rectify this error of overcharged depreciation, we should again be subtracting it, and the two negative results in a positive, which just means that we should be adding this amount of 20,000 to our retained earnings. So let's do that. That's going to be 192,000 plus 20,000, which results in 212,000. So this is the correct opening balance for this year. Let's substitute these four amounts. So for share capital, it was 500,000. The share premium was 86,000. Revaluation reserve was 72,000. And the retained earnings, we just figured it out to be 212,000. Now let's adjust each of our transactions. So the very first one was a final dividend where we paid out 40,000. And dividends paid are always to be subtracted from our retained earnings column. Let's do that. This is 2020 final dividend paid of 40,000, which should be subtracted from retained earnings. Okay. Then the next transaction we have is bonus issue, which brings in 50,000 into our ordinary shares. Let's write it down. So that's bonus issue of 50,000. And remember that bonus issue is always funded from our reserves, which means that we should be subtracting the same amount of 50,000 from our reserves. And let's have a look at our share premium. We can see that the opening balance is 86,000, which can easily sustain this entire amount of 50,000. So we can just subtract this 50,000 from share premium. But if our opening balance of share premium was lower than 50,000, then it would mean that the remaining amount should have been subtracted from the retained earnings. Okay. Then we have new ordinary subscriptions, which brought in 80,000 to ordinary share and 64,000 to our share capital. Let's write it down. This is new issue. 80,000 for share capital and 64,000 for share premium. All right. Then we have interim dividend of 11,000, which again should be subtracted from our retained earnings. All right. Now we are given revaluation reserve, and there was an information regarding revaluation above. So let's have a look there. We have already figured out that there should be a revaluation downwards of 88,000, and revaluation downwards is basically the revaluation loss, which should be subtracted from our revaluation reserve. So let's subtract this amount of 88,000. Now this is revaluation loss. And we can see that the opening balance of revaluation reserve is 72,000, which is lower than 88,000. And we cannot have a reserve with a negative balance, which means that we can only subtract 72,000 from revaluation reserve, but we need to subtract the total of 88,000. And out of 88,000, we have already subtracted 72,000, which means that now the remaining amount is 88,000 minus 72,000, which results in 16,000. Now this remaining amount of 16,000 should be subtracted from our retained earnings. So whenever there is a revaluation loss greater than the amount in revaluation reserve, the remaining amount should always be subtracted from the retained earnings. Okay. Then we also figured out the profit for the year in the first part of this question. We should include that in our statement of changes in equity. So we figured out the profit to be 109,650. Let's include that. This concludes all of the transactions for this year, which means that we can now move towards figuring out our closing balance. So that will be at 31st December 2021. For share capital, that's going to be the sum of these three amounts, 500,000 plus 50,000 plus 80,000, which results in 630,000. For share premium, that's the sum of these three amounts, so that's 86,000 minus 50,000 plus 64,000, which results in 100,000. For revaluation reserve, that's the sum of these two amounts, so that's 72,000 minus 72,000, which results in 0. And for retained earnings, that will be the sum of these five amounts, so that's 212,000 minus 40,000 minus 11,000 minus 16,000 plus 109,650, which results in 254,650. Alright, this concludes the fourth part of this question as well as the entire question number 2 of 2022 May-June paper 3-2. If you found this video useful, make sure you like the video and leave a comment below, and make sure you subscribe to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.